You are listening to the Ready PDM Network.
This episode is brought to you by Under 10 Consulting. For many organizations, it seems products get released by individual heroics. Yet most organizations need a small number of living documents, fewer than 10, to manage their products and services. Contact Under 10 for a product playbook designed specifically for your organization.
Are you ready?
As a business owner, we know you deal with a lot of problems. Don't let payments be one of them. Financeit helps your business increase sales by providing customers with affordable monthly payment options. Our service is a completely free way to offer consumer financing to your customers. You pay no merchant processing fees and can even earn commissions. Whether you operate a retail, home improvement, healthcare, or vehicle business, Financeit can help. People love your product or service. But sometimes you lose sales because your customers are looking for more affordable payment options. With Financeit's flexible payment options and enticing marketing programs, your product will fit any budget, and you'll never let another sale walk out the door. With instant approvals at the point of sale, Financeit makes the entire financing process as simple as a signature. Within minutes, the loan is approved and your customer drives off happy. Consumer financing has never been so simple. Get started today at financeit.ca.
Thanks, Katie. So we're really excited to be here today. We've used this show traditionally to make big announcements, and this year's no exception. Two big announcements. The first one, obviously, our partnership with FIS. Really big deal for a small company like ours. Secondly, that after 4 years of operating the service only in Canada, today we are launching here in the United States. So if you're not familiar with Financeit, I'm not going to hold it against you. I'm very Canadian that way. We offer a point-of-sale financing technology platform with a bit of a twist. We service the transaction on both sides of the transaction. So on one side, we have a set of merchant partners who rely on us to power sales at point of sale every day with our innovative solutions. On the other side, we have a set of financial institutions who rely on us to originate and to manage these loans on their behalf, in their name, and within their compliance framework. No small task.
Pivoting is one of the most basic skills in the game of basketball, and it's essential for dribbling, scoring, and passing effectively. Basketball players must always be ready to explode off the balls of their feet. But in order to play with quickness and keep the defender on his heels, you need to have the proper footwork. This is especially true when it comes to pivoting. The pivot itself is just moving around while leaving one foot in contact with the ground at all times.
We really had to pivot. We had to figure out either we need a better answer to how to make this thing that we've got go this way instead of that way, right? And if we can't make, which I guess if I point my hands in a podcast, you have no idea where they're actually pointing, but assume that we needed to go up very quickly in a hurry to meet our milestones and just couldn't figure out how we were going to.
I mean, some people will tell you product people that can build, can code, are the key to a really successful entrepreneur. I'm not so sure I believe in that. I think that you have to be tenacious. You have to be an amazing salesperson, and you have to be flexible. And I think the best entrepreneurs are people that on Tuesday afternoon at 11:05, when they realize the market is not reacting to what they're doing, that they roll up their sleeves and they pivot their business into what the marketplace is telling you.
My best advice to you is keep that passion, keep that focus, find a way to avoid a couple of those areas that are going to be a little harder, and you can get stuck in those places. We are out there as, visually to both our merchants and the end consumer as a brand in the financial services space. We're providing virtual installment lending at your doorstep through a set of certified. Said the first thing we have to do is to try to figure out the regulatory constraints. Lending, deposit taking, heady stuff need to be able to figure out. So we hired a lawyer even before we hired When I talk to young entrepreneurs sometimes and they tell me their ideas and they tell me with great passion this idea they're working on, and I'm thinking in my head like an old grumpy guy, oh my God, that's not going to work.
That's
right? I try to temper.
It's so painful.
I try to, that's going to hurt.
Hello, Ready Product Radio heads, and welcome to another exciting episode of Ready Product Radio. This week, we speak with Michael Garrity, founder and CEO of Financeit, a successful Toronto-based FinTech company which has processed more than $1 billion in applications from its target merchants. Michael shares his incredible story of creating a peer-to-peer lending startup, then hitting the wall that was the 2008 financial services meltdown, and pivoting to create what has become Financeit. We talk about the many FinTech unicorns that Canada has created, the incredible scale of financial services, and the expensive but invaluable lessons Michael has learned during his journey. Ready Product Principle number 13 is inspired by Michael Garrity. It is important to pick a market segment niche that you can dominate, but make sure it's in a market big enough so that you can pivot when needed, because you will need to pivot. Enjoy the show. Michael Garrity, welcome to Ready Product Radio. You and I met recently at a Great Product Hunt Toronto event, and I was, so inspired by your keynote that I thought, I'd ask you to come on and share some of the same information with our listeners. So thank you for joining us.
My pleasure. Thanks for the compliment.
Excellent. So, Michael, what the Ready Product Radio show is all about is basically helping product people of all kinds deal with and prepare for the many challenges that they're going to face on their product journeys. And definitely, you had a lot of wisdom from your journey that you shared at the Product Hunt event. So what I thought we'd do here is maybe cover three topics. I find that's usually the right length for the podcast. So the first one, we'll ask you to maybe recap some of the points that you gave us in your keynote about the journey that you've been through in terms of startups and pivoting and whatnot. And then secondly, I know you guys are in FinTech here. And the other point that you talked about that I think would be very useful is you talked about how important the regulatory framework is and understanding that. You'd almost think reading LinkedIn and some of the social media that anybody could just fire up a FinTech company tomorrow and make $1 billion, right? So I imagine it's not quite that easy. So I thought we'd talk about regulations second. And then third, what I thought would be good is heard a lot also at that event about basically are FinTech companies, startups eating the bank's lunch? Are banks going to acquire FinTechs? Are they going to duke it out? Is there enough business for everyone? So third, maybe we can just round out our discussion with your view on, if we look 5 years in the future, do FinTech companies and banks pleasantly coexist or do banks gobble up FinTechs? Just get your view on that
Great
perspective. Those three sound good?
Yeah, they sound great. I mean, we were talking about regulation in a podcast might, put everyone to sleep, but we'll try to we'll try to keep it spicy.
Good. So before we get into that, Michael, obviously you and I met at the event, but for the benefit of our listeners, maybe just take a couple minutes to introduce yourself, what you're currently doing at Financeit here, and your background, and then we'll jump into it.
Sure. So Michael Garrity, CEO, founder of Financeit. This company's had two lives. The first company that we put together was focused on what at the time was called peer-to-peer lending. It was an idea that had emerged in the United States, a company called Prosper. I was working as an executive with another FinTech company called ePost, electronic bill payment and presentment, Canada Post, Bank of Montreal, TELUS were all shareholders. So I was used to working in the financial technology space and working with big players, big banks, big institutions that were thinking about innovation in payments. That's really, innovations in payments and in mail distribution and invoicing and receivables. And I had seen the Prosper announcement in 2005 about creating this online platform that would connect people that were getting nothing for deposits with people that were asking money from banks for loans in like an eBay for lending. And it just seemed so brilliant. So brilliant, it made me cry that I didn't think of it, that somebody else had to come up with the idea first. So I literally got on a plane and I flew down to California and met Chris Larson, who was running Prosper at the time, and just said, love this, want to do it in Canada. Please tell me you're not about to launch in Canada and I just don't know about it. And he's like, no idea what happens in Canada. Feel free to, you can't have our name. And I'm not going to promise I'll never come to Canada, but for the time being, no interest. So I left the job that I had and started work on this concept of creating this exchange. Now, because I have gray hair and I've been in financial technology for a long time, I won't say how long because it's radio and I actually could be in my early 20s, but I'm not. I said the first thing we have to do is to try to figure out the regulatory constraints. Lending, deposit taking, heady stuff need to be able to figure out. So we hired a lawyer even before we hired a developer. So first lesson about FinTech, you should just expect that before you hire a developer, you're actually going to hire a lawyer and try to figure out the nuance of, can we do this? What are the things that we need to be considering? What are the propellers we don't want to walk into and turn into pink mist? How do we structure this that we can take advantage of the innovation that we want to introduce, but without running across the shoals of a regulator who's not happy with what you've done? So that began a journey on the first company that was in the peer-to-peer lending space. It was a hard journey. It was a journey that almost killed us a lot of times, killed me personally a few times as well. We ran out of capital, we raised capital, then ran out of it. We spent more money on lawyers than we did on technology people. We ended up getting caught up in a financial crisis, which happened in the middle of creating a company. The largest financial crisis affecting financial services and debt specifically across North America happened in the middle of seeking permission to try to create an innovative exchange for debt. So the end result, sort of flashing forward, is that the constraints, the regulator finally allowed us to launch something much more constrained than what we had originally planned. So we were stuck with a business plan that we didn't think could ever work. We were live. It was a bit of a Pyrrhic victory. We got live. We got to say we were first, but ultimately we were first and likely to be first and last as we projected forward what this thing was going to likely look like. So, those are tough realizations as an entrepreneur and as a company to come up with. I remember we went away for a weekend as a small team and said, okay, guys, what does this mean? And essentially what we did is to say, what have we learned that we are good at? And what have we learned is possible for us to be able to do that could make money and turn into a real business? And a thing that had happened in the middle of the financial crisis, something that we didn't expect, was that not only did it make the business we were trying to do really hard, maybe impossible, but it also opened up another piece of the market that was adjacent to what we were doing. So one of the things that I said in the speech when I was speaking to the crowd was to say, pick a space that's big enough that even if you don't get your first thing right, you can pivot inside of the space. You don't have to remake the whole company. It's big enough to go solve an adjacent problem that's $1 trillion problem, right? And that's the great thing about financial services. It's the single largest industry in the world. It is the largest contributor to GDP on the planet. 14% of the GDP of the planet is related to financial services. So that's a big enough industry to go in and tackle a problem. And then if you're not able to solve that problem, you can solve an adjacent problem. And that's what we did. We had this lending platform. We couldn't do it the way we wanted to do it, but our phones were ringing off the hook from people calling us and saying the financial crisis decimated point of sale lending. These guys that used to be in here, Wells Fargo Financial, HSBC Finance, GE, all of them are leaving Canada because their model broke in the financial crisis. So we looked at that and said, okay, we know how to do that. That looks like a much easier model to pull off. There's less regulatory issues associated with it. So we went and found a bank partner and said, you've never been in that industry, but you like it. And you've never been in there because it's hard technology-wise. We're really good at technology. We're really good at services. And we've just been through this painful compliance and regulatory process. where we now have learned the hardest way possible and the most expensive way possible how to be in this space and be effective. So if we go over there, are you willing to come with us? And the bank partner that we joined with said, absolutely. So we pivoted, we rebranded from Community Lend, which was our first name, to Financeit, which we thought was more appropriate for that market. We redesigned the technology and we set a path in that direction. We had to recapitalize the company. I had to say a lot of apologies to shareholders. We had to look at the management team and decide if that was ultimately the right management team for the new mandate. Made some tough decisions there, brought some new folks in that are still core to the company today, and became co-founders in that new business. And then we really moved forward with Financeit. You sort of flash forward from that, 2011, to today, we're one of the largest point-of-sale financing companies in Canada. We have taken a pretty significant investment from Goldman Sachs. We're in the process of putting together a big rollout in the United States. We have over 4,000 merchants that we deal with in the Canadian business. We look at about 2 million in loan applications every single day on the platform that just come in from our merchant group. And we feel like we've got real momentum. We're solving real problems for customers. We're becoming mission critical in the sales cycles of the people who use us. It's a great space. We've got lots of work to do and lots of growth ahead of us. We have major accounts that we're dragging in now that we think we can help them grow their businesses. So it's an exciting time.
Yeah, excellent. So Michael, if I can ask you, maybe you can talk a bit as well about. So we're talking about point of sale financing. So if I can use an analogy, if my wife and I go in, let's say to a furniture store, buy a bedroom set or something, is this the idea where the salesperson says, listen, you can buy this cash, or we have this financing option? Is that?
That's exactly what it is. Okay. Our main focus is in the home improvement industry. Okay. So homeowners, big ticket items all around improving the home, new kitchen, new roof, the furnace breaks in the middle of winter, it's going to be $15,000. People that are borrowing, in essence, to invest in maintenance of value, invest in the creation of additional value in the home and the property that they have. Those people, what's hard about that industry is that you got guys that are out in trucks, giving estimates to people in their homes, writing things on pieces of paper, right? It's a big number. It's tough to swallow. Sometimes they're shock expenses where your furnace breaks down. I'm sorry, Mr. Jones, I know it's February and it's Edmonton, but it's time for a new furnace and new ductwork and that becomes a very big expenditure for that homeowner. So what our job is to empower that practitioner, that person trying to sell stuff to people, with a tool that breaks down a very big number into a small monthly number with a reasonable, fair interest rate for the consumer, and to enable all of that transaction to not have to have a single piece of paper associated with it. You can take a picture of a driver's license, takes the data out of it to pre-populate a credit app. That credit app works with a cloud-based system, so you get an immediate response and that you can then share with the consumer. You can add a marketing program to it that says, you know what? Like, I understand it's Christmas time. Let's not even pay for 3 months. First payment on this job is going to be in February or March. Don't worry about it. So let's get the job done. Let's give you ease of mind. Allow you to have a great Christmas.
Kids can still get their presents.
You're not going to have to take the Nintendo back. That's right. And then we'll get you in a reasonable monthly payment after that. No penalty for prepayments. Most of our people don't prepay us because we have a reasonable interest rate. There used to be people in this space who took advantage of folks. They say don't pay for 3 months and then hit them with 25% annualized interest. That's not us at all. Our interest rates start at 6.99%, right? So bank level rates for installment lending, delivered virtually through a paperless, cloud-based, mobile-enabled product. That's what we love to do every day.
Yeah, and correct me if I'm wrong. So, and you still have that bank partner in the back end, or?
We, in fact, have 2 bank partners now, and a third one on the way, just for the Canadian business. In our U.S. beta, we had 3 bank partners with another 5 lined up behind them. So One of the questions.
Yeah, so you don't apply for a bank license. You're not carrying a float to finance these things. Yeah, you've got partners.
Yeah, and to jump a little bit ahead to one of the other questions, because you've already let your listeners know that we're going to cover all three of these areas.
That's right.
And we'll keep it interesting.
Yeah.
I'll answer that question already by saying we think of this as co-opetition.
Okay.
We are out there as, visually to both our merchants and the end consumer as a brand in the financial services space. We're providing virtual installment lending at your doorstep through a set of certified dealers. That's what we do. Right. Now, to a certain degree, we're competitive with a bank product. You might otherwise, go put a suit and tie on and make an appointment and go sit with a branch manager and tell them about this new job you want to do and the house and the renovation, and then maybe you negotiate something and there's a whole bunch of paperwork. That seems like not a great process. So instead, we're going to find a way to bring that right to you where you want the transaction to happen. Now, we want to partner with banks, as many banks as possible that want to be in this space, who are able to say, I'm good at a bunch of things. You will never beat me on your ability to be able to generate deposits, build trust with people in relationship to managing assets, and to effectively extract yield from taking a low deposit-based interest and lending it out at higher amounts. Those are things that banks do excellently, and we want to partner with that capacity and be able to add our technology and service orientation and sales orientation in the point-of-sale lending space. Now, there might be some banks that want to be competitive with us, and now they've got a tough job on their hands because we're going to have partner banks and we're going to have best-in-class technology, and those two things married together are going to make a difference in this industry. So co-opetition is kind of how I see it. And I think when I look at FinTech and the impact that FinTech is having in the financial services landscape, I would say more often than not, it's co-opetition as opposed to disruption that's really occurring in the financial technology space. And I know it pretty well, right? So you look at the stuff that's happening in currency, stuff that's happening in wealth management, stuff that's happening in insurance, stuff that's happening in payments, stuff that's happening in lending, in core lending business, direct to consumer. Most of it is either peripheral, like things that banks don't do or don't do a lot of, or it's where the technology companies partnered with a set of financial players and is delivering value by a 1-2 punch. And I think that's going to be more often the case.
Yeah, good. So if we can go back though, Michael, to your own journey, because a big part of the value is I'm assuming there's some aspiring product people, some entrepreneurs listening. So when you look at your journey, talk to me a bit about that decision to pivot, and maybe you don't even think of it as a decision, because like you say, the market conditions kind of forced it. But a lot of what I hear is sometimes people are reluctant. They get married to an idea, and maybe maybe it's not that they've painted themselves in a corner. Maybe they just know that I know this idea is the right one. Like, talk to me a bit about what process you had to go through, maybe both mentally and emotionally, to say, this, we've got to do something different here.
Yeah, well, there's nothing like staring at sort of an imminent cliff that helps to motivate decision making, right?
Right.
So, we were, very frankly, we had a limited amount of cash,
maybe, or something.
Limited amount of cash that we had raised. We had an expectation from the folks that had given us that investment that they would be good for more, provided we could show enough momentum, enough traction is the word that you often use in our business, enough traction to be able to say, this is evidence that this is going to get someplace. Right. We're investing here so that we can exit up here. So you need to show us a trajectory that gets you there. Now, there are some businesses that you can bootstrap, right? And I love when I hear about those businesses of like, a couple of guys start coding, they develop an app, it's super cool, it takes off.
Their mom's basement,
Their mom's basement. There isn't going to be anyone in the financial technology space who develops something cool out of their basement. It just isn't going to happen. I've never heard of it happening. It's not going to happen. It's my prediction, bold. Maybe I'm wrong, happy to be wrong.
And but in the presentation you said, anybody challenge you. That's right. So I'm here, I'm not going to challenge you, I believe you.
So, in this space, it often is a big capital play because financial innovation it's about a few things. It's about sort of a thorough understanding of regulatory environments. It's usually about solving a big problem. And then thirdly, and most importantly, it's about scale. It's a gigantic industry. you need scale in order for people to know who you are, how to use you, and then to get your distribution in place, right? It's tough to serve just one customer and just one little pool of capital and have that be a significant business. So it's really about scaling. So this is one of those businesses that you actually have to get a lot of capital in. And that puts you on a treadmill to a certain degree. When you start raising capital, I have to hit milestones, because if I don't hit milestones, I lose the confidence of my investors. And if I don't hit milestones, it's really tough to get new investors in. So that's a bit of a long-winded answer to your question. This moment of we had to pivot. We really had to pivot. We had to figure out either we need a better answer to how to make this thing that we've got go this way instead of that way, right? And if we can't make, which I guess if I point my hands in a podcast, you have no idea where they're actually pointing, but assume that we needed to go up very quickly in a hurry to meet our milestones, and just couldn't figure out how we were going to do that before we ran off the cliff. So the pivot for us was, do we think that this business model could evolve to be a better business? And there were a lot of blank stares. We had a couple of ideas for, in our little weekend retreat, we had a couple of ideas that said, maybe the regulatory environment will change. All right, who here wants to bet the farm on a massive change to the regulatory environment in the next 12 months?
And hold their breath while it happens.
And hold their breath, dancing on one foot. Nobody put their hand up for the bet. Okay, we're brainstorming here. That's okay, right? Next, do we think that consumer adoption is organically going to happen? Like magically one day, there's just going to be 1 million people that roll in that want to do the thing that we want to do. Will the nervous capital guys in the market, the bigger players who've all exited the country, are they going to magically just show back up again within the next 12 months? And as we looked at what would need to change in order for the business model to work, no one felt like those were good bets. And then we said, okay, if we had to take what we have and what we know and who we are and make a better business out of it, what would that look like? And then that set us on a very different path, a path that had power and energy behind it. You could just feel it in the room. And then off we went, right? And you put it in place. And it was a bit of a hold your breath, because we're going to pivot, we're going to wind this thing down, and then we're going to pick this thing up, and we're going to publicize the pickup, not the wind down.
Yeah, exactly.
It ended up working for us, but there was nothing guaranteeing it would have worked.
So what was roughly the time frame between you maybe in your gut more than in your head realizing that you'd probably have to pivot or do something, and you guys actually having the plan B, the pivot, aha moment? Year, 2 years?
So the one thing about me that's either my best quality or my worst quality, depending on who on my management team or my wife that you might ask, is that I have a tendency to have multiple plans going at any given time. So I plant lots of
scenario
seeds.
guy.
I'm a bit of a scenario guy, right? And so I'm testing a few things, trying not to distract people from the core plan, but having a few test things, a few backup plans. It's just what I do. And so, as we were starting to realize that our forecast for how the business that we'd like to work was working, i.e. we weren't hitting our forecast, and we were diving in, okay, what could we change there? How do we change cost of acquisition? How do we change throughput? How do we change the effectiveness of the channels that we're getting? How do we get less of those guys that we say no to and find a way to get more of the guys we know we're going to say yes to? How does this part get less inefficient? Everybody was focused on those things, and I was thinking to myself, okay, what would some alternatives look like? So I was having some conversations with other people saying, what else is interesting in this space that we could potentially do, right? What if we were to adjust our program and we look more like this? Well, what about this? And so when it came time to brainstorm a different direction, I had a few ideas for what I thought would make sense. And then the rest of the team was able to build on those, and we created momentum in a different direction.
Good.
Yeah.
So just to kind of pull out the lessons very blatantly, what I'm hearing you say is you always have some scenarios in your mind. So you never, it sounds like you're, because we hear about these people that wake up in the middle of the night, they have an idea and they're just married to it. But it sounds like you're more of a scenario guy, so you're going to execute on one path, but you've already got a couple in your mind. So that's probably good advice for founders. And then the other one that I hear you saying a lot just with your answer is we. So you must have a strong team there with you as well. It was, versus an I type of scenario, right? Yeah.
Absolutely. Yeah.
Or me, I should say.
Yeah, me. Yeah. Well, thank you. That's actually a good thing. You want to come off as that guy, so I appreciate that is certainly the teams, because we've had a few different teams in different lives that we've had in this business, but we have fostered and developed a great team here of people that are devoted to their task and are innovative thinkers and love the journey that we're on most days, most days. And that's essential in building an early stage company. You will confront a lot of problems because the Peter Thiel view, you're moving from 0 to 1. That's the intent. You are creating something where something didn't exist. And that's really exciting, and also requires a tremendous amount of problem solving on the fly. And a lot of things you don't get right the first time. And you have to be that personality type that says, okay, I realize when we didn't get it right, and we're going to iterate or throw away very quickly to try to get it right. And that does take a certain talent, a certain dysfunction, right? And you can't. My experience, I'm not smart enough to do that by myself. So I need to surround myself with great folks that are in the boat with me. Good stuff. So one more question just on the story, and then we'll talk about some of the other topics. So the 2008 kind of crash threw a monkey wrench. Now, one of my previous episodes was discussing this blockchain topic, which is very popular these days. And one of the use cases that we were talking about with that was this idea of microtransactions. So by a blockchain lowering the cost and increasing the security, you and I could loan each other $5, $10, whatever. So I guess the question for you is, if you look at kind of the same idea that you had back then, in today's environment, do you ever think about that, whether it would have a go today, or do you think no, that's history, I'm focused on what I'm doing right now? So yes and yes would be my answer. So yes, I think that the environment is a little bit different. There's more cadence and pattern that's been developed in this space. Crowdfunding, market peer-to-peer has shifted to marketplace as these platforms have grown up a little bit. One of them's already gone public on a stock exchange with a multi-billion-dollar valuation on it. There are whole conferences that have hundreds and sometimes thousands of people that go to it that just are talking about the intersection point between available capital, looking for fixed income types of returns, and innovative origination platforms for lending that are developing in North America, around the world, and how these things can come together, and where regulation. So there are more people involved trying to solve problems. It's got more of a hive solution mentality around it, and there are some people that have been able to really make it work. In Canada, there's a few folks, brave souls, that are trying to make this business model work for Canada, learning their lessons from those like ours who went before and failed at being able to make a strong business model out of it. And I every day wish them the best and hope that they're able to make their models ridiculously successul over time. I'll celebrate them from the sidelines. But to your next question, to your other question, do you ever look back and think, maybe we'll do that? No. I will be cheering these people from the sidelines. We love the business that we've fallen into here. And I love when the phones are ringing. I sit in the sales pit with the sales folks, because I love hearing customers call us, hey, I've got a guy in front of me. He was hoping that he could get this rate versus that rate. I'm trying to get this 6-month payment deferral out to him, but I don't really know how it works. Can you help me? Because I'm really excited. I want to land this deal. And that value creation that we feel every day is what is just it's what gets me out of bed in the morning. And so I don't look back at all on the model that we've left behind. We're just planning on, what are the 8 things we could do with this model to accelerate its growth, to solve bigger problems for the customer base that we have. That's where we're focused.
Yeah, good. Yeah, so I'm going to pull out another thing from what you said there, Michael, because it resonates with a lot of the people that I talk to as well, which is it's not just about money. So, the passion in your voice is inherent, and I think the lesson for a lot of up and coming product people is don't just chase the buck. You like you say, you have to feel some other non-monetary jolt,
right?
Like you say, from adding value and whatnot, right?
Absolutely.
Am I reading that correctly? Okay, cool.
Absolutely. So, when I think about what motivates me and when I see it reflected in the team around us, it's not about how much money can we make, how fast. And in case any of my shareholders are listening, I still do care about those things.
That's not the only thing.
That's not what really motivates us is creating value and finding a way to take an industry or a process, making it better for the people that are there, knowing that we're doing something significant that's bringing value. If we were gone tomorrow, would there be a diminishment in value? Would we be missed in the ecosystem that we play in? And every day, the answer is yes, absolutely. We are doing something that is meaningful, and we've got a lot more work to do and a lot more meaning to bring to it. But if we can help increase the sales of good quality merchants out there doing their job, and we can make the average household budgeting and planning a lot easier by what it is that we've done, well, we've served a mandate, and that gets you excited, right? You want to know you're doing something that's bringing value and making money at it, right? But that's not the thing. We don't just go to the board every day and say, how do we make more money today, right?
Yeah, exactly. Yeah, that's good. So Michael, let's transition to the second topic, and we don't have to get into too much boring stuff on the regulation, but I just wanted to go back to some of your comments from your keynote about the fact that we do see a lot of activity in FinTech, and you tell a story about learning a really expensive way about all the different regulations. Like, what do you see with when you look out there, all the new startup companies in FinTech are is there's obviously not a school that they can go to, FinTech university to learn all this stuff. So do they make mistakes as they go? You remember you told some stories about, or I think you did, about some companies that maybe took some chances without doing their homework. Like can you give me any feeling around that? Like maybe, example of a downside if you don't do the homework, the upside if you do,
Sure. So 3 things. The first is that, we don't celebrate our stories of success enough in this country, in my view.
Okay.
And we got to stop that. We got to really start being a lot more boastful.
Or too humble.
About the companies that are killing it by solving big problems. And in that keynote, I tried to highlight a few of those companies that no one talks about as interesting companies, but that are all unicorns. This concept of multi-billion-dollar companies that got started here, that are focused around technology, and that ultimately end up being worth a lot of, get a significant valuation because of their size and scale.
Sure.
Guys like D&H, right? So D&H is this great example. Davis and Henderson, they started doing really boring stuff. Checks. They wrote checks for people that had your name and pretty little pictures of antelopes or whatever you wanted customized, and that was what they did. It's financial technology. It's boring financial technology, but it's financial technology. They got to a scale, and then all of a sudden, as that business started to drift off, they moved into check remittance clearing and imaging and document storage. Then they got into servicing a whole bunch of bank needs around loan origination and loan processing and transaction processing and call centers. And now they're acquiring new companies or acquiring other financial technology companies around the world they're moving into being a dominant global player in the financial services technology space, publicly traded, multi-billion dollar. They just acquired a company for $3.5 billion.
Crazy.
Why aren't we celebrating D&H
Yeah.
as a maverick Canadian wild success story in the financial technology space?
Yeah.
There's a company that started in Canada called Markit, right? MARKIT. They went public on the FTSE, and they're a multi-billion dollar company. Now they've got offices internationally, and people forget that they started literally as a bunch of guys that came out of TD.
Yeah.
But that's another gigantic financial technology company. First National is another one. So there's all of these stories of Canadian companies, multi-billion dollar market cap companies that are innovated in technology and grew and were wildly successful. Kinetics, another great Canadian company that's on their way to being, wildly successful. So we are winners already, and we don't talk enough about it. Okay. And those are the kind of stories that and people, and that you should go and find ways to get them to mentor with you, so you can learn the lessons of what they did to create multi-billion dollar value companies in the financial technology space. So there's a bunch of other ones that are starting to emerge. It's getting easier and easier to build these kinds of companies, because there's more interest in financial technology, which means there's more capital available to invest in good ideas. Because of open source coding, you can build things much faster. Because people are building a lot of things with APIs now, and there's a lot of established APIs in payments and transaction processing and e-commerce sites. You have different distribution networks you can plug into that allow the business to pick up significantly faster. If you're solving an important problem, you can plug in someplace, and you've got throughput and distribution that can generate a lot more distribution and revenue. Mobile is just completely changed everything in application delivery and application development and distribution. You now have an app center that immediately exposes you to 2 or 3 million consumers, or 2 to 3 million businesses. And as long as you can convince people of the merit of your product and your app, you get these distribution hubs that are things that we could never think about when my hair was dark back in the olden days of financial technology, when you're sort of clunking around. And so that's made this space very exciting. At the same time, you can never lose sight of the fact that when you're dealing with people's money, and when you're dealing with giving money or taking money or moving money or creating money, i.e. Bitcoin and blockchain, anything related to money, there are a set of rules and regulations that govern that at federal, provincial, state, municipal levels, international levels, that you have to understand thoroughly and build into your processes and your procedures and your control components. So fraud is rampant. There are lots of bad actors out there that will, when there's money concerned, are motivated to. This isn't a vendetta. This is get to money, and so you have to be very careful about those things. There are lots of laws, some of which silly laws, but there's still laws that are there to protect people from what regulators would perceive as risks and issues. So whether that's anti-money laundering, whether that's disclosure, whether that's protection of privacy of information, whether that's the creation of investment opportunities that then need to have the right processes and procedures for how those investment products get into the hands of potential or would-be investors, and investor protection rules associated with it. In the United States, you have concepts like fair lending, where you have to make sure that the type of lending activity doesn't have a built-in bias against any particular type of group. So tons and tons and tons of things that you need to be thinking about and have built into your processes if you're going to get into this business. And there are companies that have ended up on the shoals of making bad decisions or ill-conceived decisions. There was just another one yesterday that I saw in Canada, a little company in the marketplace lending space that had made a number of bold statements, would be the nicest word to describe it, around how the securities regulators really need to kind of get with the times, and that they felt like they had good counsel and knew better. And then there was an announcement yesterday saying that they have ceased operations in consultation with the regulator. And when they made the statements at first, I thought, okay, I wouldn't have done that personally from having suffered through all the pain I suffered. I wouldn't anger the beast. But
Poke the bear, so to speak. Yeah.
Poke the bear. Don't poke the bear.
That's right.
But it was interesting and maybe, very prescient to see that they've now announced that they're going to cease operations pending some consultation, which if I know the regulator will be long and expensive and possibly fatal. So we'll see. Right? We'll see.
Yeah, yeah. So you mentioned that. That companies, they can hire that. So you can hire some expensive lawyers. You can get mentoring, which you mentioned. I imagine you can work a little bit in the financial services industry before you start your company.
Hire people that work in the financial services industry.
Okay.
You can get a hold of other entrepreneurs that are in that space and describe what it is that you're trying to do and to get their bounce. There are some great investors in this space who've specialized in investing in financial technology companies. There are some in Canada. There's a lot in the U.S. And you can just go to Crunchbase and pick 3 or 4 companies and then just follow who's investing where. I think there's even emails that go out that just specifically talk about financial technology. There are events that you can go to, Finovate, Money 2020, Lend It, that are all oriented to the ecosystem around financial technology and financial services, and they're great places to go and learn. And multiple tracks of people talking about things. It is a really exciting industry because mobile and the internet and changes to the financial regulatory landscape are really opening up opportunities. And companies, there are going to be tens, if not hundreds of companies that create multi-billion-dollar organizations as a result of their focus and execution in this space. And we expect to be one of them.
Yeah, that's great. So we'll move on to the third topic, and I know you tackled that already a little bit, but let me ask it another way. One of the things that I read a lot, and I even hear it, for example, at events like the Product Hunt Toronto event, which was based on FinTech, which is okay in the future. The future role for banks are basically to just be these big dumb pipes. So we need them because they're flowing the cash through. But all the innovation and all the cool stuff and the customer relationship and the onboarding and all of that will be handled by other intermediaries. That's not really what I thought I heard you earlier, but just maybe tackle that. Would you dispel that as like a outright untrue, an oversimplification? Is it part true? The pipe part, like.
Yeah, I think that I would say that describing that being the outcome and the destiny of financial institutions would be akin of making the same predictions for people like Bell and Rogers. Right? Back in the day, everyone was essentially saying with the internet and with all of these these young upstart mobile companies and spectrum bandwidth being auctioned off, it's just a matter of time before those companies are just big dumb pipes. But they don't feel like big dumb pipes.
Profitable pipes.
They continue to evolve their business and look at their existing brand, their service infrastructure, their relationships with the capital markets, their innovation, internal innovation commitments, their connection to a customer base and their distribution, and their power in the market to continue to innovate and find ways to evolve their businesses, acquisition and organic growth and partnerships, to continue to be relevant and significantly relevant on a go-forward basis. And I think the banks are in exactly the same mode. You've got tremendously innovative banks, like, let's say, a Tangerine, which used to be ING Direct, run by a really great guy, Peter Aceto. And Peter's an innovation guy, and he's a bit of a visionary, and he creates value, and he goes different directions. I mean, they're now owned by Scotiabank, and they're a subsidiary of Scotiabank, but they're going to continue to find innovations that keep them at the forefront of the market. I think there are a whole bunch of other banks that are very focused now. I've met some great people who are working in innovation areas inside of the banks. They're looking there'll be fast followers on areas, let's say like blockchain, that can start getting traction, and they'll see the promise of it. They don't move quickly, but they will be followers. And when they follow, they bring scale to following.
Right.
And so, our thesis all along has been, don't walk around pretending you're going to disrupt the financial institutions. Right. Look for ways to partner with them, and where it's a win-win for everybody involved. And that way you tap into scale, and the ability to have brand and trust and scale. The bank partnerships that we have made us a better company. Yes, they audit us and hold us to a high standard for regulatory adherence, and times where it feels like we're going to get crushed with their oversight and overhead. But it makes us a better, stronger, more effective company as a result of having those partnerships. And I think that'll serve us well as we continue to scale. So I'm biased. Maybe it's the gray hair, but I believe that finding ways to partner with big players. And you look at Power Corp. Like Power Corp, they own Investors Group, they own Great West Life. So they've got wealth management, they've got insurance companies, but they're an innovative organization, and they invested in Wealthsimple. They've got a group of people over there who are looking, what's the next thing? They understand that some of their products are at the top of their S curve, if you're familiar with that kind of MBA expression of the top of the S curve, but they're smart people. They're looking, how do we create new S curves, and what are the assets that we bring to the table, and how do we leverage our scale and our brand in order to grow in new areas? How do we learn from people who are innovating and get a piece of that and bring it back in-house and make magic happen? There are companies that will be, banks included and insurance companies included, who will be wildly successful through partnerships. One of my investors also runs a new startup called League, and Mike Serbinis is looking at the insurance space, and he's doing a bit of a pivot on his business to focus on insurance. One of the first things that he went and did as a seasoned entrepreneur is go and talk to a bunch of insurance companies and say, this is this thing that I'm building. It could be disruptive, or it could be a partnership with you, and we could get some great scale. And I think they're going to be really successful as they put those types of relationships together with existing players.
Good. Michael, I want to respect your time.
Sure.
So the last thing I always ask all of my guests, because I imagine a lot of my listeners are younger people that are listening because they want to learn about product and business and whatnot. So my final question is always this. You and I both have gray hair. So if you were to go back, and I don't have any hair actually, but it's radio, so let's pretend that I do.
It's huge. It's right. Bouffant hair.
That's right.
Yeah.
If you were to go back and give some advice to the 15 or 20 year younger Michael Garrity, having learned what you've learned and whatnot, what advice would you give yourself in terms of the right moves to make, shall we say?
Younger Michael. Stick with it. Make sure you chase Jen down, even though that's my wife's name. I had to chase her. She was a great investment.
Good.
So
no regrets there.
No regrets there.
Good.
Stay with it. It's going to be hard.
It's worth it.
Younger Michael. So you know what? There's so many things that I would do differently. But there are days where I go back and say, I would tell younger Michael, to not do peer-to-peer lending, or to give up earlier and pivot the business. But then I think about it, and I think so much of that is the journey that we had to go through, the learnings that we had around how hard it was going to be, and how much the regulatory impact would then influence the business that we tried to create to avoid some of the things that we had done the first time, wrong in essence, or in a misguided way. And I think if you were to tell that person how hard it was going to be, they might not do it because they're sane. Right.
Exactly.
But at the time, it's nothing but puppy dogs and roses ahead of you as you sort of think about the future. So I actually don't want to talk to younger Michael. I want him to do what he needs to do.
Good.
Right.
You don't want to discourage him.
Don't want to discourage him, because that, and I think when I talk to young entrepreneurs sometimes, and they tell me their ideas, and they tell me with great passion this idea they're working on, and I'm thinking in my head like an old grumpy guy, oh my God, that's not going to work.
That's right.
Right. I try to temper.
So so painful.
I try to. That's going to hurt so much.
That's right.
You're going to be old and gray too. But I try to temper and say, in there is a really interesting idea, and then be honest and frank and say, I can see how some of that's going to be really hard. So my best advice to you is keep that passion, keep that focus, find a way to avoid a couple of those areas that are going to be a little harder and you can get stuck in those places. Find a way to get to revenue faster, find a way to get that use case down for a simpler task, get some velocity, and then start chipping away at some of the harder tasks. You don't have to boil the ocean. And so that's how I kind of try to frame it, so that we can keep the cadence of innovation happening in this country. I guess that's a tough question. Maybe I should have listened to your podcast and knew that question was coming.
No, it's and I think even if you don't, give, and it can be sounding glib and whatnot, but I think listeners get a lot from your story, right? So, use mentors, find mentors, momentum, all good stuff. So, Michael, if somebody's listening to the podcast, they're intrigued with something that you've said, they want to reach out and contact you. Any contact or follow you, any contact or follow information that you're comfortable sharing?
Sure. My email is michael@financeit.io, and people can contact me directly through there, and I'll route them to the right place if it's not me that they have a question about. I'm on LinkedIn. The only place you can't get me is on Facebook, because unless we have had a drink together, I will not accept your Facebook ask.
Nice.
So that's my one, my one private place. But I'm on Twitter. I don't use it a ton, but we do, broadcasts. We have a Twitter channel and a Facebook page that we try to keep up to date with news about us and where we are and thoughts that we have in the industry at Financeit. So just look for those places as well for our communication.
Yeah, good. So, and Michael is Michael, is that correct?
Indeed.
Okay. Yeah. Just checking that. Well, Michael, on behalf of our listeners, thank you very much for taking the time. I know you're a busy executive, so much appreciated. And maybe we can do this again sometime, maybe in another year or so. See how the company's going.
See if I'm grayer by then. Yeah.
Maybe I'll have hair by then.
I think I'll notice. But thank you. I appreciate your interest in us, and hopefully this has been helpful for the people that love your show.
Definitely. Thank you, Michael. Today's podcast was brought to you by Under 10 Consulting. Get your product teams up to speed quickly with the latest methods and a proven process tailored to your organization. Thank you for listening to this episode of Ready Product Radio, part of the Ready PDM network. This is when most podcasters ask you to leave a review on iTunes if you like the show. My only request is if you found the show entertaining, inspiring, or informative, please share it with a colleague or friend who may feel the same way. Also, note that the views expressed in this episode do not necessarily reflect my views or the views of the Ready PDM network. If you want yourself or your product to be ready, then keep your eyes on your markets, your ears to your customers, your mind on their experiences, both good and bad, and finally, keep your hearts in your products. Until next time, thank you for listening. You can contact us on Twitter at Ready Product Radio. That's RDYPRODUCTRADIO. And on the web at www.readyproductradio.com.
Jay, what do you want to do tonight?
The same thing we do every night, Pinky. Try to take over the world.
You're still here? It's over. Go home. Go.